strategist at Agora Financial. Alan, we've been watching the market reaction, or the initial reaction, I should say, on the back of this decision. It was the Dow was down more than 100 points initially. It's coming back up, down just 53 right now. What are your thoughts?
Well, this doesn't change the game much. The markets had it right. There was about a 70% probability there was going to be a rate cut, and now it was 95% last week. And again, with some of that action by the Fed in the repo market, they thought maybe they didn't need to do as much, and so that probability lessened. But looking further out, which we do in the futures markets, you're seeing that there's a 50% chance of a rate hike. That's what the markets are telling us in December, and then it gets down to like 20, 30% out to March. So that's been reduced. Looking at the big picture, after we go through all this minutia, the market momentum maintains itself here. We're within striking distance of the all-time highs of the S&P. I don't think this changes the equation at all. And even with rates going down, I think that makes stocks even more attractive.
What do you think of their move as far as this issue that's only raised its head this week with the overnight repos of having in their tool shed the ability to lower the interest rate they pay on excess reserves 30 basis points instead of 25 to get the banks to lend to each other and then subsequently one day to us?
Well, it's just another lever that they can pull. So, they're not a one-trick pony. They've done a fantastic job over the last 10 years. Up until these last couple of cuts, it had been smooth sailing, and then the course changed for whatever reason. As a trader, my focus right now is on the super strength of the dollar. Is the dollar ever going to go down? We're in this range between 90 and 100 now for 5 full years, and it's still maintaining the strength even though we continue to cut rates. Again, it's a race to the bottom with currencies around the world, but we did see a Eurozone moan here this week where we saw the markets, the Euro currency make a new low and then a higher daily close. Maybe the bottom's in there and maybe the top's in the dollar, because you've got to understand the political interest of a weaker dollar is helpful to those in the know.
But I mean, if you look at the dollar, I mean, we've been talking so much about how the strength of the economy compares, the domestic economy compares to what we're seeing outside of the U.S. I mean, isn't that inevitably keep the dollar more positive? I mean, if you're looking at markets like Europe, over in Asia, like Japan, I mean, we're seeing those central banks cutting even further. That has to just mean more upside for the dollar, right?
We've seen this race to the bottom before, so we'll see what the results, turn out to be. But there's been a lot of times here over the last year, I would say, that the dollar has had the opportunity to go down and it didn't. So it still remains strong for whatever reasons, but eventually there could be a turn there, and I think that could be a catalyst for the market one more time. Let's remember the political interests in this. The political interests were in getting rates cut. That's happened. They created enough chaos to cut rates. Maybe they'll find some way. This is the first administration that's ever said that they would prefer a weaker dollar. That's just not something that's said out loud. I guess, obviously that helps corporations that are doing a lot of exporting. But, that's something to pay attention to. Is in the big picture, I still think the stock market is on a solid track. The choice of putting your money for yield into treasuries or putting it into the stock market, there's still no choice, and it's actually getting to be a harder decision even to think about getting into treasuries.
Will we be able to measure over the next 2 or 3 days where the flows out of, for instance, fixed income towards equities or towards other currencies or towards the U.S., towards the dollar, where that's really telling us how this is being interpreted, or do we need a longer viewpoint?
Yeah, I think we need to look at the big picture. What was interesting to see is that, let's remember last time when Chairman started speaking and had his press conference, the market continued to drift lower. And as I've been told personally sometimes it's better to just stop talking. Let's hope that, he answers the questions, that he's a little more comfortable with the questions and parses the words a little bit more, and the market can be more stable. Let's remember what we've been through in the last year, and the market is this close to all-time highs. I mean, this is unprecedented, this chaos, this instability, but again, stocks are remarkably stable.
Hey, Alan Nuckman, appreciate you joining us today. Let's get to Scott Gamm on the floor of the New York Stock Exchange. Scott, what's the reaction there?
Hey there.